What's interesting, we in January of this year, we put out some astounding metallurgical results. So in mining, you got to find the ore body first. That's number one. And there has to be enough of it there to make commercial sense to build a mine, which can be capital intensive. So the ROI has got to be there. So once you do that, but once you find the ore body, you also have to extract the minerals from the ore body cost effectively. That's called metallurgy. And many a good mine has died on bad metallurgy because sometimes it's easy to get it out of the rock and sometimes it's hard. So if it's hard, it costs more and that affects your overall financial dynamics. So when we announced that metallurgy, it should have been the green light to the world to say, oh, these guys are going to have a mine. This is unbelievable. So we announced it, but the stock went up initially from $1.50 to $1.70 or something. I was thinking it was going to double, and then then over the next 3 months, it dropped back to 90 cents, and we thought to ourselves, wow. Yeah. Every copper stock in the world dropped by 40% because of the Iran conflict. So we were caught in that bathwater. So we sort of had to say, hey, what is it that the investor is not getting about this? Because clearly there's something missing because, we're not communicating it. So we sort of came back and said, there's probably three, questions in the investor's mind that we weren't adequately addressing, and we're now trying to do that with your help. And one of the things we realized is that, because we're not just a copper mine, we have platinum, palladium, gold, and silver, and it's over top of a nickel ore body. So it's a complicated, in terms of multiple minerals, that's unusual. So just being unusual, whenever you have something that's, when you're selling the fifth AI company, it's easy to sell because it's like, everyone knows what AI is. Yeah. But when who's selling the fifth polymetallic company, right? So that's a bit of a challenge on the communication side. So, and I think what happened was their perception is there has been a couple of polymetallics companies that had low-grade deposits and had bad metallurgy. And they went from being worth, $3 billion to worth $500 million. So guys lost a lot of money. So there was a fear out there, I think, and there's still a latent fear in the investor's mindset is that this will happen to you. And so that's why it was important to put that metallurgy out there to say, no, it's not going to happen to us. This rock comes out of the ground. So that was point number one. Point number two is that grade is very misunderstood, okay? I can tell you from a market perspective, if I wanted to get impact on the stock, I would get more impact by saying I had a 100-meter hole of 1% copper than a 10-meter hole of 10% copper. Yet, the 10-meter hole of 10% copper is far more profitable to produce, okay? But because it's so unusual, like the last time that discoveries like this has been made is 18 years ago by Anglo-American in Finland called Sakatti. So the market just doesn't understand it. So when they see our intercepts and they think, oh, you know what?